Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Southstate Bank Corporation Annual Report. Southstate Bank Corporation offers a wide range of financial services and products to individuals and businesses across the United States. The company provides various types of deposit accounts, including checking, savings, money market, and time deposit accounts, as well as interest-bearing transaction accounts. In addition to deposits, Southstate Bank Corporation also offers a variety of loan options, such as commercial real estate, residential real estate, and commercial and industrial loans, as well as consumer loans for auto, boat, and personal installment purposes. The company also provides business, agriculture, real estate secured mortgage, home improvement, and manufactured housing loans. The bank services extend beyond deposits and loans to include debit and credit card services, mobile banking, funds transfer products, and treasury management services like merchant, automated clearinghouse, lockbox, remote deposit capture, and other treasury services. Southstate Bank Corporation also offers asset and wealth management, fiduciary, and private banking services. Furthermore, the company provides safe deposit boxes, bank money orders, wire transfer and ACH services, brokerage services, alternative investment products like annuities and mutual funds, trust and asset management services, letters of credit, home equity lines of credit, and online, mobile, and telephone banking platforms. Southstate Bank Corp's stock price has experienced a notable increase over the past year, driven by a combination of strong financial performance and strategic corporate actions. One key event that contributed to this momentum was the bank's robust fourth quarter 2025 earnings report, which exceeded analyst expectations with adjusted earnings per share (EPS) of $2.47. This strong financial performance was accompanied by several other positive developments. The company's board of directors authorized a new stock repurchase plan and increased its quarterly cash dividend, signaling management's confidence in the bank's financial health and commitment to returning value to shareholders. Additionally, several financial analysts upgraded their ratings and slashed or raised their price targets for SSB following the earnings report. The successful integration of Independent Bank Group, Inc., which was completed on January 1, 2025, also played a significant role in driving Southstate's strong financial profile. The acquisition expanded the bank's market presence into Texas and Colorado and increased its total assets to approximately $65 billion. Management highlighted the successful integration of this acquisition as a key driver of earnings and tangible book value growth. Overall, these positive developments have collectively contributed to substantial positive momentum for Southstate Bank Corp's stock price, with a reported 12.45% increase year-to-date as of February 20, 2026. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline in a company can be attributed to several key factors. On the growth side, interest income from acquired loans, increase in average balance of non-acquired loan portfolio, and higher yield on investment securities have contributed significantly to revenue expansion. The acquisition of Independent for $1.6 billion has also been a major driver of growth, as well as the strategic repositioning and sale of investment securities. Furthermore, the purchase of new securities using proceeds from sales of securities acquired from Independent has led to an increase in total average securities balances. Additionally, interest income earned on all investment securities increased by $108.3 million, representing a 60.7% growth from the previous year. On the other hand, revenue decline can be attributed to factors such as decrease in loan demand due to Federal Reserve's interest rate increases and global events/geopolitical tensions. The loss of fee income from disintermediation has also contributed to revenue decline. Moreover, non-acquired construction and land development loans declined by $280 million. It is worth noting that some drivers may be related to each other, and the company's financial performance is likely influenced by a combination of these factors. Net income and profit margins. A changing landscape, the net income of a company underwent significant fluctuations between 2022 and 2025. Initially, it decreased from 2022 to 2023 due to various factors such as inflationary pressures and interest rate changes. However, the trend reversed in 2024 with an increase in net income. Unfortunately, this growth was short-lived, and net income declined again in 2025. A closer look at the profit margins reveals a similar pattern of fluctuations. Despite initial concerns that profit margins might decline due to increased costs and reduced demand for products and services, they actually decreased from 2024 to 2025. However, there were some positive developments as well. The company's net interest income and non-interest income saw significant increases in 2025, thanks in part to the acquisition of Independent. The reasons behind these changes are multifaceted. Inflationary pressures and interest rate changes had a negative impact on the company's financials, while decreased mortgage volume and demand for mortgages also contributed to the decline in net income. Additionally, potential environmental liabilities and operational risks posed a threat to the company's profitability. On the other hand, increased capital requirements and regulatory scrutiny led to higher expenses, which offset some of the gains from interest income. Overall, the net income and profit margins of this company have been subject to significant fluctuations between 2022 and 2025. While there were periods of growth, the trend was largely downward due to various internal and external factors. The company's debt level and interest expenses have undergone significant changes over the past year. A notable increase in debt levels is evident from various points. The consolidated Tier 1 leverage ratio rose to 9.26% in 2025, up from 4% in 2024. Similarly, total liabilities increased by $17.8 billion, and long-term debt obligations reached $696.5 million in 2025. The interest expenses have also seen a substantial rise, primarily due to higher interest expense on interest-bearing deposits. The average interest-bearing liabilities increased by $13.3 billion, or 47.4%, to $41.3 billion in 2025. This increase is reflected in the total debt level and interest expenses, indicating that the company has taken on more debt and incurred higher interest costs. The growth in commercial and commercial real estate loans also contributed to the rise in debt levels. Total commercial and commercial real estate loans increased by 54.6% from 2024 to $37.2 billion in 2025. These changes suggest a significant shift in the company's financial position, with higher debt levels and interest expenses becoming more prominent. Management is optimistic about the company's outlook, citing significant growth in financial performance over the past 2 years. Net income has increased by 62% from $494 million in 2023 to $799 million in 2025, while total assets have grown by 48% from $23.4 billion to $34.6 billion. The company's risk management strategies are also highlighted as a key area of focus, with measures in place to mitigate credit, market, liquidity, and operational risks. Management is confident that the company's capital adequacy ratio of 12.3% as of December 31, 2025, demonstrates its ability to absorb potential losses. In terms of investments, the company has seen success in its Qualified Affordable Housing Projects, QAHPS, which provide federal low-income housing tax credits and operating loss benefits. The adoption of ASU No. 2023-2 has allowed for more accurate accounting for these investments. Management is also committed to returning value to shareholders through dividends and stock repurchases. A quarterly cash dividend was declared in January 2026, while a stock repurchase plan was approved for up to 5,560,000 shares of common stock. Overall, management's discussion suggests that the company is well-positioned for continued growth and success, with a strong financial foundation and effective risk management strategies in place. The acquisitions and divestitures of Independent Bank Group, Inc. are significant transactions that have shaped the company's financial landscape. On January 1, 2025, the company completed its acquisition of Independent Bank Group, Inc., which included the purchase of Private Capital Management, LLC. This acquisition was part of a larger merger known as Independent Merger, also closed on January 1, 2025. In addition to these major acquisitions, the company has acquired certain assets and liabilities from other financial institutions, with specific details mentioned in page 64 of the document. Furthermore, the company merged with another entity called Independent, although no specific date is provided. The acquisition included loans worth $135.4 million, PCD, and $80 million, non-PCD, from Independent. On the other hand, the divestitures include the dissolution of SSB Insurance Corp., which has been in dissolution since 2024. Regulators have also mentioned the possibility of selling subsidiaries or other assets as a potential action. The company has demonstrated a commitment to returning value to its shareholders through both dividends and share buybacks. In terms of dividends, the company has paid out significant amounts in 2025, with a total of $230.2 million distributed among common shareholders. This is in addition to quarterly dividend payments made in 2024. Regarding share buybacks, the company has also been active in repurchasing its own shares on the open market. In 2025, it repurchased 2,440,000 shares at an average price of $91.85 per share, totaling $224.1 million. This is part of a larger stock repurchase program that authorized up to 3 million shares for repurchase in 2025. Overall, the company's actions suggest a focus on returning value to its shareholders through both dividends and share buybacks, indicating a commitment to shareholder value creation. Concerns about supply chain disruption have been raised in recent years. The rapid shift to remote work, shopping, and banking has accelerated technological change, leading to supply chain interruptions. Furthermore, severe weather events pose a significant threat to supply chains, potentially causing disruptions. Additionally, climate change is identified as a potential transition risk, with supply chain disruptions being a notable consequence. These factors highlight the vulnerability of modern supply chains to various disruptions. That concludes the financial summary for Southstate Bank Corporation. Feel free to comment below, and I will be happy to answer them when possible.